Take profit and stop loss. Take profit and stop loss are forms of market orders. Let's start with take profit. As a trader, you would not always be online monitoring all your trades. It's not as if a forex traders just get a seat and stay in front of the laptop all day. Some of your trades may stay over the night, some may last for 2 days, and you may have a date with your girlfriend, you have Champions League to watch, or maybe your friend that just hammered on one big trade is hosting a party. You even have your work to go to if you are a worker, of course. So you have many engagements. That is where market orders come into play. So take profit is a form of market order that tells your broker to close your trade for you and lock in your profit when your trade moves a certain number of pips in your desired direction, even if you are not online. Remember, in forex we are always doing two things: buying and selling. Let's take a scenario when we are buying and give an example. Let's say you entered a currency pair, let's call it AAA and BBB, and it's currently at $40. And from your technical or fundamental analysis, you found out that it would soon rise, so you immediately opened your MT4 and clicked on buy, and your target profit for this particular trade is just 50 pips. And you don't want to be greedy. Like I always tell my students, never be greedy in forex. Eliminate greed, pick the little you can't, and move on. Even if you can't make $50 daily, even if it's only $10 you make daily in a week, that's $10 times 5, that's equal to $50. That's equivalent to 25,000 naira in a week, and that is great. It's a good start as a beginner. With time, you will upgrade to $50 daily. That is $250 weekly, a total of 125,000 using 500 naira as the exchange rate. So you grow gradually. Let's fire on. Let's say you enter the currency pair, let's call it AAA and BBB, and it's currently at $40. And from your technical or fundamental analysis, you found out that it would soon rise, so you immediately opened your MT4 and clicked on buy. And your target for this trade is just 50 pips. I repeat, you don't want to be greedy. For you to set a target profit at 50 pips, you add it to the price you entered, which was $40. So your take profit would be at $90. So anytime the currency pair AAA and BBB starts climbing and reaches $90, even if you are not online, your MT4 through your broker's server would close the trade for you automatically using your MT4 and add the $50 profit to your account immediately. So that is how take profit works. Once you set it at that particular price on your MT4, whether you are online or not, it closes the trade for you and lock your profit. Now I want you to pause this video and open your MT4 to see where to set your take profit, so that we can also see practical example using real currency pairs. First step is to click the button pointed by the purple arrow, which will take you to a chart. And secondly, you click the button pointed by the red arrow, which a window will pop up like this image. Now this is where you can input your take profit and stop loss. TP stands for take profit, SL stands for stop loss. So having seen where to insert the take profit, let's now do some practical examples of how to calculate take profit. The box on the right is the space for inputting your take profit, while the space on the left is for putting in your stop loss, which we will see next. Okay, assuming I want to buy Euro USD at that current ask price of 1.09312 and I want to take profit of 30 pips, what I would just do is to add 30 pips to that former value of 1.09312 and I would have 1.09342. I hope you remember pips calculation. This is where you'll be using it. So my take profit for that trade will be 1.09342. Then I'll go into that take profit box space and type it in. So immediately the currency pair rises during its usual fluctuations and gets to 1.09342. My broker, through the automation of MT4, would immediately close the trade for me, whether I'm online or not, and then add my profit to my account. Notice that I used ask price because I was buying. During selling, we would use bid price. Now let's see another example. Let's take US dollars, Canadian dollars at the current ask price of 1.27360. Let's say I want to buy the pair and I want a profit of 50 pips. For me to get a take profit of 50 pips from that trade, I would need USD CAD to rise to 1.27410. That is 1.27360 plus 50 pips. Hence, I would go to my take profit box and type in 1.27410. When USD CAD rises to 1.27410, my broker would automatically close my trade for me and add my profit to my account. Remember, in buying, we are making reference to the ask price, not the bid price. That is why we are making reference to 1.27360 and not 1.27349. So let's get to the sell scenario. Let's focus closely from here onwards. This is where people always get confused and ask questions. However, encourage yourself that if people who didn't even go to school are trading forex and doing the basic addition and subtractions, that you too can do it. In selling a currency pair at the forex market, you are selling after you have found out from your technical or fundamental analysis that the price would fall. Hope you remember that. So as the price is falling, you are making money. That is the opposite of buying. So immediately the price falls from $100 to $55. The broker, through automation of the MT4, will add your 45 pips profit to your account. That is the beauty of forex. You make money both ways, whether a currency is rising or falling. It's none of your business. You just enter in the right direction and make money. Let's now see practical examples. Let's say after our analysis, we found out that AUD USD would fall. So we decided to short, that is to sell AUD USD pair. Remember, now we are interested in the bid price because we are selling, and the bid price is currently at 0.73736 in the image, and I want a take profit of 60 pips. What would be the value of my take profit? Here, because we are expecting it to fall, our take profit will be below, not above. So subtracting 60 pips from 0.73736, we will have 0.73676. Then I will now input 0.73676 into the same take profit box we used when we were buying. Same take profit box is used both when we are buying or selling. So when AUD USD falls and reaches that number, my broker will automatically close and add my profit for me. Let's see another example. Let's say that after my analysis, USD weakened because of a bad news and I want to short, that is to sell USD JPY. And I only want a take profit of 25 pips from that current bid price of 114.857. Take note, bid price, because we are selling. What would my take profit be? I will just subtract 25 pips from that current bid price because I'm selling, and I will get 114.832. Then I will input that into the take profit box. When price gets there, my profit will be added to my account immediately it reaches that level. So in summary, we have seen that while buying, our take profit is up. However, in reverse, while selling, our take profit will be below. So pips calculation is basically straightforward if you learn how to calculate it. It's not rocket science, just basically addition and subtraction. Now we have seen what is bid and ask price and the difference between them, which is the spread. We also saw how to calculate take profit in two opposite scenarios, buying and selling. Now we will look at stop loss. Stop loss is another important form of market order, which is like the opposite of the take profit order that we saw. In this scenario, you are giving your broker an instruction to close your trade when the market wants to go against you. Market is always going up and down, and sometimes news may pop up and sway the market in the opposite direction in which your trade was planned. But with a stop loss order, immediately the market wants to change and go the opposite direction. Your broker would close the trade for you through your MT4, even if you are not online. Let's see where to put the stop loss order in our MT4. Go to the same place where we saw where to put in take profit. The box on the left is where you type in your stop loss. Let's say I want to buy a currency pair named AAA and BBB, and the price is currently at $40, and I want a take profit of 50 pips. So I would sell my take profit at $90. Now after setting my take profit, I will also tell my broker that, look, Mr. Man, I am buying, so I want my trade to be open only when the price is going up. That if the price tries to go down by, let's say, more than 10 pips, close my trade for me, so you only want to stay in the trade when the price is going up. Now you give your broker a stop loss order of 10 pips. Remember, the initial price was $40, so for a stop loss of 10 pips, you should set it at $30. So anytime the price reverses and starts falling without your knowledge, even if it gets to $30, your trade will close for you, preventing further losses even if you are not online. Let me give another tentative example before we use real charts and see examples. Let's say I want to buy a currency pair CCC and DDD, and the price is at $100, and I want a take profit of 70 pips and a stop loss of 20 pips, meaning I don't want to lose more than 20 pips. My take profit will be at $170, while my stop loss should be at $80. So anytime the price wants to fall and it falls by 20 pips from $100 to $80, my broker, through the automation of the MT4, would close my trade for me, preventing me from further loss even if I'm not online. Technology of MT4 has made forex so interesting. You control how much you earn and also how much you want to lose in case market reverses. And let's see some real examples now. Let's say I want to buy USD JPY at that ask price of 114.864 and I want a take profit of 70 pips and I don't want to lose more than 20 pips. What will now be my take profit and stop loss? My take profit would be at 115.934. That is after adding 70 pips to the current price, and my stop loss will be at 114.844 after subtracting 20 pips from the current price. I'll now type in both into the take profit and stop loss respectively. Let's see another example. Let's say we want to buy USD CAD and we want a take profit of 100 pips and a stop loss of just 2 pips. From that ask price of 1.27360, our take profit would be at 1.27460. That is after adding 100 pips to the current ask price, while our stop loss would be at 1.27335 after subtracting 25 pips from that same ask price. So you now go to the take profits box and type in 1.27460 and go to the stop loss box by its left and type in 1.27335, then click on buy button. Once price tries to fall instead of rise and falls to 1.27335, your trade will be closed. Now let's get to know how to calculate stop loss in the opposite scenario, which is selling. Follow closely from here so as not to get confused. Take your time to understand it. Remember, in selling you are only making money when price is falling, like we saw. Let's say I want to sell a currency pair TTT and UUU, and the price is currently at $80 and I want a take profit of 50 pips. Remember, here you are selling, so your take profit is always below, so you set it at $30, which is 50 pips below the initial price of $80. Now let's get to stop loss. While selling, you don't want the price to rise. That would be going against you. So for selling, you set your stop loss above the price. In case if it tries to rise, you are telling your broker to cut you off the market. So for selling, you set your stop loss above the price. In case if it tries to rise, you are telling your broker to cut you off the market. So assuming I don't want to lose more than 10 pips, I would now set my stop loss 10 pips above the initial price of $80. Hence my stop loss would now be at $90. If you notice, this is exactly the opposite of what we did while buying. While buying, our stop loss was below the price. Now it's above the price. Let's see another example. Let's say I want to sell currency, a GGG and HHH, and the price is currently at $100 and I want to take profit of 60 pips. I don't want to lose more than 10 pips. My take profit will now be at $40 below the current price because I'm selling, while my stop loss would be at $110 above the market price because I don't want to be in the market if the pair wants to rise. Let's see real examples now. Let's say I want to sell USD JPY, US dollar versus Japanese yen, at the current bid price of 114.857 because I know it would fall soon from my analysis, and I want a take profit of 150 pips and I don't want to lose more than 20 pips. What would be my take profit and stop loss? My take profit would be at 114.707 That is after subtracting 150 pips from that current bid price because I am selling, while my stop loss would be at 114.877 after adding 20 pips to the current bid price of 114.857. Notice that I am using bid price here and not the ask because we are selling. Let's see another example. Let's say we want to sell AUD USD due to weakening of Australian dollars, and we are selling from the current bid price of 073736. Take note, bid price because we are selling. And I want a take profit of 80 pips and a stop loss of just 15 pips. My take profit would be at 0.76656. That is subtracting 80 pips from the bid price of 073736, while the stop loss should be at 073751 after adding 15 pips to the current bid price of 0.73736. So pips calculation is basically straightforward if you learn how to calculate it. So in summary, while buying, your take profit is above because you want the price to go up, while your stop loss is below because if it starts going down, that's against your trade plan. In reverse, while selling, your take profit is below because you want the price to fall, while your stop loss should be above because if it starts going up, that is not your trade plan again. I will give you a task after this lesson. We will now move on to another important topic. After this topic, you will have a better understanding of how money is made in forex. Our next topic is lot size.